Hey guys, welcome to the Newbie Real Estate Investors of New Jersey podcast. I'm Joey Chan.
And I'm Jonathan Boyle. And today we're actually here at Clear Skies Title Agency. We're talking to Victor Ng and Victor Liu regarding title. So stay tuned, everyone. Hey, Victor and Victor. Thank you for having us at your at the title agency today. So I guess we'll just jump right into it. How'd you guys get started?
Sure. I guess I'll start that one. So yeah, we get that question a lot because title insurance is one of those things that people really study in school.
Right.
Kind of just stumbled upon it. Like I'm sure most title people or people in our industry did. I studied at Rutgers. I studied real estate, and I was always interested in that, even in college. So I majored in urban studies, and then when I graduated, I went to Monster.com, and the first job that I saw in real estate was a title search company. So that's how I got started. And then I knew Victor. He was my good friend in college. So as soon as he graduated, he joined me.
Cool. So Victor, how did you get started?
Well, first of all, thanks for, letting us do this. It's going to be pretty excited to kind of share what we know. But, I don't think anyone kind of grows up and says, I want to be a title agent.
I know. I don't think so.
So, yeah, Victor and I knew each other in college, worked on a couple different things together. We're part of a couple different organizations together. So when I graduated, didn't really know what I wanted to do. And so Victor said, hey, let's build this out together. So I thought that was a pretty exciting opportunity for a recent college grad. Yeah. We started together in the search space until, I guess in 2014 to 2015, we had the opportunity to jump into title insurance and open up the title agency. So that's what we did. So I mean, it's been a fun ride all the way since college. I think, pretty blessed with the opportunity to kind of start building a business right from the get-go.
Yeah.
A lot of lumps along the way, but it's been good.
No, I mean, you guys have built a tremendous following and, business. So, Victor, can you tell our audience what title is? What does it mean to do title?
Yeah, sure. I guess that's when you get used to something so much, you kind of take for granted that you think that everyone understands what it is. But
right.
Title insurance is this insurance, right? It covers risk. So whenever somebody buys a piece of real estate, buys a piece of real property, there's risks involved. The risk is that the seller may have taken out debt that they didn't pay off, or maybe somebody 20 years ago, 30 years ago, 40 years ago borrowed money, and there's some sort of lien that runs with that land that you would be inheriting by buying that property. It also would cover any sort of, issues with the ownership. So we search back 40 to 60 years on, to make sure that every owner, when they transfer to the next owner, the deeds are recorded. Everyone that had an interest in the property is signing that deed to convey that interest out. You frequently see when somebody passes away and their heirs inherit the property. Once in a while, you'll find one heir didn't sign off on that deed, or maybe the spouse didn't sign off on that deed. And so those are risks to a potential buyer who's paying $200,000, $300,000, $400,000, $1 million for a property, and now all of a sudden they don't realize they don't really own it. So those are things that title insurance covers. That's probably the best way to explain what title is. Mm-hmm. Just because it's such a big investment, these things get missed, these things happen, or there's uncertainty involving real property. So they invented this insurance product to help buyers feel comfortable with buying that property.
I see.
Is that?
Yeah, no, it makes perfect
no.
sense.
Yeah.
So basically, in essence, it's just to protect the new homeowner or someone that's purchasing a piece of land from any liens or anything that might come back to bite them.
Yeah, so we call them defects in title or clouds on title, things that would challenge the ownership of that property, anything that would draw a question to the ownership of that property. There's a little bit more to it, but that's probably the simplest way to put it, I guess.
Gotcha. So what are some things that newer investors should be well aware of when it comes to title?
Okay, so I mean, I don't know. You want to jump in here?
You take that one.
So from a title standpoint, any investor, if they're buying a property that's in default or that's delinquent on taxes, like those are the opportunities that I guess investors are looking for, where there's some sort of distress with the homeowner, so that's who they're marketing to.
Mm-hmm.
That level of distress comes with a lot of title headaches, right? So, a newbie investor could expect that those properties that they're, if there's a tax lien, they're marketing to tax lien lists, that there may be judgments as well, or they're, targeting list pendants. Well, in order for you to kind of target those list pendants, you also have to deal with the creditor's attorney and, negotiate the release of the foreclosure with them. Or that you might have to, if you're dealing with a mortgage, distressed mortgage, you're probably going to have to deal with some tax liens as well. So, dealing with newbie investors in title and the title that they bring us, it does pose more challenges.
Mm-hmm.
We have to be a little bit more careful in doing our searches, and our expectation is that it's going to be a little bit different. For those that are buying foreclosure properties from banks, REOs, or from sheriff's sale, it's important for them to realize that there are additional searches you have to do to make sure that, if you were to sell me a property, I know you voluntarily gave me that property, right? And I know that it's going to be very hard for you to challenge that sale. But in a case of foreclosure, somebody actually got the property taken away from them, whether they deserved it or not. They're not going to be happy about that. So that's much more ripe for some sort of litigation where they're going to challenge that sale to me. And that's something that the title company is going to have to prevent, or to take a reasonable measure to make sure that doesn't happen and doesn't affect that new buyer.
I see. So are there some common questions that a newbie buyer would typically ask you guys?
Or should
ask you guys, rather speaking?
You mean just like when they first contact us, or just as they're working with us?
Let's say in both scenarios, let's say I'm going out to look for a title company. What kind of questions do you usually encounter?
Sure. I'll tell you the number one question we get by far from a newer investor is, do you do double closings?
Okay.
And we get that question so often that we created like this nice infographic that we can share with people, so because we get that question like so much. And I think sometimes what they're probably they took a course and they were trained maybe to ask these kind of questions to kind of feel out whether a title company is investor friendly. So that's probably the main question that we get.
Okay.
Would you mind explaining what a double closing may be for someone out in the audience that might not know?
Sure. Yeah. So we do get we have a lot of clients that are wholesalers. So really basically, if you're probably listening to this podcast, you kind of know what that is. But if you don't, it's someone who's basically not actually purchasing the property, not taking title to the property. They're kind of acting as a middle person between the seller and an actual end buyer, and they're kind of keeping a fee or a commission in between for kind of facilitating that transaction. So really, a wholesaler is someone who's an investor but doesn't really actually purchase and own the property. A double closing is kind of is also a different approach or strategy that a wholesaler might take. Typically, a wholesaler who isn't making a massive spread, they're making like $5,000-$10,000. That's still a lot of money, but usually people aren't going to freak out if they find out later on between the seller and the end buyer that you're making that fee. Some people are making such a massive fee that they want to keep that hidden. So in essence, they're doing a double closing. So there's two separate entire closings, so that they don't have to really reveal that number that they're making in between. They're usually buying the property from the seller on one day, and then selling the property to an end buyer on the same day, in a separate transaction. So it is trickier. There is definitely different risks to that. And then we, as a title company, always recommend, if it's possible, to do the assignment route because it's a simpler transaction. But it is something that we do know how to do.
So just for anyone out there, and correct me if I'm wrong with trying to explain it a little bit. Let's say you're looking to do a double closing. You have a property under contract with the seller for $200,000, let's say, and then you have an end buyer that's willing to pay $300,000 now, because you don't want to reveal that either to or to the seller, or possibly even to the buyer, you do that double closing, and then now you make that middle difference.
That's correct. Yeah.
Okay.
That was a great way to explain.
Awesome. Just want to make sure.
Yes.
Yes.
Yeah.
Is there any other questions that typically
Get brought up.
that get brought up?
I guess we get all kinds of random questions. Feel free to jump in.
Yeah.
But those are, the dominant question is, we heard that you're investor friendly. Do you do double closings? Do you do assignment of contracts? Do you work with wholesalers?
Can you give us leads? Do you guys have any list for leads? The cost comes into play here and there. How fast is your turnaround time? Do you do share of sales? Basically, they're pretty surface level questions on what we do, what we're willing to do, and what we're unwilling to do. And I think, I think that's the nature of our industry. Everyone's a title agency, but title agencies look at these deals very, very differently. Some title agencies won't touch them with a 10-foot pole.
Yep.
Some title agencies are open to them, and some title agencies are super welcoming to them. So, and there's no sign on the door that says, we love assignments, we love double closings, right?
Yeah. Right.
So I think that's why they're coming out and they're trying to build out their team. And because that's what they're coached to do, to build out their team, to find a title agency that's willing to facilitate those kinds of transactions.
Yeah, absolutely.
Okay. So I know you guys started. What year was it again?
So officially, I started the title search company was my first company. I started in 2006. Victor joined me very shortly afterwards, and then Clear Skies wasn't officially started until 2014, 2015.
Okay.
Okay. So what's the main difference between when you started the title search company versus now what you do? Like, what was the main difference?
Sure. So for a title search, I know it's a commonly misused term, or they use simultaneously both terms, title search and title insurance.
Yeah.
But really, title search is they're the people who are actually in the courthouse doing searches for land records, where they're not usually making decisions about whether or not to insure. Does this look weird? They're just reporting exactly what's there. It is a very important, but actually in the grand scheme of things, just a small part of the title insurance process. So basically, we were just a search company. We worked for other title companies. Okay. If you're a regular title agency, you're not, unless you're doing 20, 50 deals a day, it doesn't really make sense for you to really have the title searching arm. So we were working for other title companies. So that's the main difference. And now our job is greatly increased. We're ordering searches. Of course, we do have that advantage from our title searching background.
Right.
But we're doing much more after that.
I see. So are you guys still doing the title search as well?
Yeah, so we still we still own that company,
Okay.
but it is something that me and Victor it didn't really feel like. But part of it is because we want to really put all of our attention into growing Clear Skies, but also for, I guess, probably maybe ethical reasons, we're just not involved in that because our clients, the clients for the title search company, could perceive us as competitors.
Yeah.
So
right.
we really it's a separate operation. They run completely independently. I don't even know who their clients are.
Okay. Yeah. That's kind of what I was getting at. Yeah.
Okay.
With the
One, common misconception about the title search and the difference between title search and title insurance is, a title search is actually very, very limited, right? It's limited to what's recorded and what's out there in the county clerk and what's findable, right? And why do you need, a question we kind of get from investors or non-investors is, why do you even need title insurance if I'm already doing a title search?
Yeah.
When the title search already tell me everything I need to know. But just to give an example, a title search would reveal that Joey sold me a property and Joey signed a deed into me, and that deed looks good. But there's no way for a title searcher to find out if Joey actually signed that deed. You're trusting the name, trusting the signature, and trusting that the notary actually checked the ID, right? But there's a lot of fraud out there. There's a lot of unscrupulous notaries out there that are willing to do things, right? Mm-hmm. So. That's where the holes are, right? A title search is it's a reasonable title search, but the title insurance covers everything that's outside of reason. It's the forgery, it's the fraud, it's the all the bad stuff that people do out there, and that's why title insurance is still really, really important, regardless of whether or not you did title search. So title search is, like Victor said, is very important, but it has a limited scope, right? And that's why all the other holes, all the other risks need to be captured by title insurance.
I see.
Okay. Go ahead. Sorry.
Oh, no, that's okay. So I kind of forgot my question. You go ahead. You have the question in the meantime.
It's okay. So just, you don't have to give like major details or anything, but like, what's something you've seen that's been out there as far as title that might be like something out of the ordinary?
Like a situation.
Yeah, like a situation. There you go.
Yeah.
Like an example situation.
that the title insurance actually covered. You know,
Gotcha.
where I don't know. I really can't think of anything crazy, but I'm sure you guys have.
Sure. I guess Victor covered in situations where someone fraudulently signed something. So that does happen, and we do see that. Someone fraudulently signed a release of a mortgage. Someone fraudulently signed a deed. These things happen.
Mm-hmm.
I guess other stuff that we see for sheriff's sale auctions. Sometimes in New Jersey especially, you have to go through a massive process if you're the foreclosing bank in order to take that property to sheriff's sale. They work really hard to do that.
Yeah.
And they have to send all these letters to the right people at the right times and have records of it. So we have a couple times when we've had investors go to sheriff's sale. They bid the most, so they have 30 days to come up with a deposit. And in that time, we are checking, to make sure that this bank did everything right. And there's been a few times we found they didn't. They didn't notify certain people. In one case, it was someone the owner showed proof. The person who lost their home showed proof that they were in a mental institution at the time that they were supposed to be served this stuff, so they couldn't have possibly received the summons. So therefore, that would void the sale. Stuff like that.
Oh, wow. And what is that process called?
That search is called chancery.
Chancery search, right? Yeah. Okay.
Okay. Would you mind going into detail about some of those specific searches you do with title related stuff?
Like what kind of searches we do?
I mean, like I know you said chancery. Are there any other like?
Sure. I guess the major searches we do is the county search. That's our first company. And that's when you search land records. Additionally, we search upper courts. That's state level judgments. We also search tax records. We do flood searches, tidelands. We also search probate, which is a different courthouse in case someone passed away or is missing from the deed. We need to confirm that person actually died.
Mm-hmm.
Am I missing anything?
We do the state. It depends. It's very situational, right? So it depends on what you're looking at there. If you're looking at something, if you're looking at a seller that's an LLC or a predecessor in title is LLC, you want to make sure that LLC actually exists and it actually exists in New Jersey and is in good standing. Otherwise, there's a lien. Well, the state, you're not allowed to hold title if you're not in good standing, technically.
Okay.
So that would be an issue. You're not allowed to convey property when you're not in good standing, which, you guys have bought and sold properties. I'm not sure,
I always wondered why you needed something from the state saying it was in good standing. So that's good to know.
So sometimes you have to reinstate by paying, you get those letters. If you're forming a lot of LLCs, every year you get these really annoying letters that you have to re-register.
Yes.
And it's maybe a couple $100. I don't know how much it is, but a couple $100 that you have to re-register. It's always a pain and you never know what it's for. But if you're going to sell a property, you got to reinstate. You got to make sure those are up to date.
Mm-hmm.
Otherwise, the state will stop you from selling. So it's very situational. There's solar panels. We need to make sure that UCCs are taken care of and searched. UCCs might be filed in the county. It could be filed in the state. That kind of stuff.
Okay, that makes sense.
That's pretty.
Back to your question about like the crazy situations. One kind of comes to mind, or crazy deals or title insurance things that we did. We once did a closing, and it was fairly straightforward. We received a payoff statement from an investor, and the payoff statement was given by their lender. They had a loan out with the lender. Let's say it was Boyle Bank LLC, and it was signed by a woman named. Well, let's just say it was signed by Jonathan Boyle, right? So it looks as legit as it possibly could be, right? Even the person that signed it had the same name as the bank's name, right? Turns out, the owner of that bank had a sister or a niece or a cousin that worked at that bank that was signing these discharges without actually getting paid. So she would get paid $10,000 to $20,000 to release the mortgage off the property, and she was pocketing that money because I guess the owner of the bank or the lender wasn't really that involved, and so he wouldn't find out until 5 months later that, hey, how come this never got paid off, but from a title standpoint, from our standpoint, we have a discharge. The discharge was recorded. We had a payoff statement, so everything looked legit, except it was just this employee of the lender that was kind of going rogue and doing this on her own. And he didn't even find out. It wasn't that he wasn't getting payments. He didn't even find out until she was bragging about it to her coworkers about how she was doing this and getting paid so much money to be signing. So he heard about it from a different employee, and so he called us up and said, hey, I never got paid, and obviously, that's something that we have to deal with after that. But but it's definitely not something that the buyer wants to deal with, right?
Okay. Yeah, so it kind of brings me back to a question that I forgot earlier. With the title insurance, do you represent just one title insurance company, or are there multiple title companies, like for different situations?
Sure. So we're underwritten by three main companies: Westcor, Fidelity, and WFG.
Okay.
So I guess for people that are unfamiliar with the industry, basically, what happens is we do all the work as the agent. That means we are originating the business. We're doing all the searches. We're determining whether or not to insure, really. The only times we even reach out to them for any kind of approval is if the deal is over a certain size, and usually it's around $1 million for these underwriters. So most of the time they're 100% relying on us to do our due diligence to close the deal. But then afterwards we give them a percentage of what we collect at closing, and they're really the insurance behind us.
Right.
So in case you guys have a claim 10 years from now and something has happened to us and we're not in business anymore, you're not relying on us to stay on business to pay that claim. You're relying on these massive companies.
Right.
Some of these are publicly traded companies that have been around for 100 plus years. So,
yeah.
That's their role, but they don't actually look or get involved in our business on that level.
Cool. Okay.
That's good to know.
Yeah. So do you mind doing a quick walkthrough as far as let's say from day one, when an investor calls you, how the whole process goes? So for someone who's never actually purchased the property and closed, so they get a kind of a sense of, so day one, they call you and they have a contract, so go from there.
Sure.
How that whole process, internal process,
Got it.
actually, goes.
Got it. Do you want to take this one?
Sure.
Yeah.
So generally, our first interaction with the investor, and let's say they're a wholesaler, is they'll call us up and they're scouring for people to add to their team. So they'll say, hey, I'm working on marketing. I'm trying to get a few properties under contract. I'm working on them. Do you guys do double closings? So we'll explain to them what our rules for double closings are. They can't be short sales. Both buyers. So in a double closing, there's two actual transactions. Each transaction must stand on its own. So it can't be a short sale. Both buyers must buy title insurance. Okay, even the wholesaler must buy title insurance.
Okay.
And each buyer has to bring their own money, right? So you can't just flip it and use the end buyer's money to pay the seller. Right?
Yeah.
You have to bring your own money.
A dry closing, right? Yeah.
So let's say they get a property under contract, right? And let me kind of explain. There's newbie investors, which we work with, we've had a lot of experiences with, and then there's seasoned investors, and there's a few differences between how they work. And maybe we can add some value by explaining what the differences are.
Yeah.
But generally, for a more seasoned investor, they won't send us the contract until they have a buyer lined up, right? And the reason for that is if they don't have a buyer, then they might not have gotten this property at a good price. They might not be taking title down by themselves if they can't find a buyer. So a newbie investor might send us a contract and say I'm working on finding a buyer. And then we kind of are in a holding pattern. Should we start on the searches? Should we not start on the searches? We typically do. But then, maybe a couple months down the line, or a couple weeks, a couple months down the line, they say, we finally found a buyer. We now have to close in 3 days. So hopefully we finish the searches, and then when the title gets ordered, we order the searches. The searches come back and the searches get examined. After they get examined, there's something that goes out called a title commitment. Title commitment is kind of like a checklist of things that you have to clean up. It's kind of like an inspection checklist, right?
Mm-hmm.
All the things that you have to clean up from a title standpoint in order for us to provide title insurance. After that, it moves to our settlement department. Our settlement department is really the ones that handle the money. So they will prepare a closing statement to make sure the seller is paying everything they need to pay, the buyer is paying everything they need to pay. And then they actually facilitate the actual closing. So they'll make sure that all the things that need to be collected on the commitment get collected, and then they send a notary out to the closing and make sure that everything is signed correctly. But for a newbie investor, again, to go back to that, a newbie investor, again, they won't have the buyer lined up necessarily, and then they'll want to close very, very soon, even though there's no, I think, for a lot of people, there's this sense of urgency because they think the deal is going to fall apart if they don't close quickly.
Yeah.
Or maybe they promise the seller something. That is a little bit unreasonable, and then they take a long time to find the buyer. For the more seasoned investors, they understand a few things. Number one is that if there's no real deadline, like they give themselves ample amount of time to find a buyer,
Yeah.
right? They set expectations with the seller appropriately. And then they order title when everything's all put together, everything's organized, and they have a structured deal. And maybe they'll even put, they already have an idea of what's on title, and so they'll give us some of the documents that they know we're going to need. Some of the LLC documents. They'll put us in touch with the attorneys, and then they'll let us know if the end buyer is using some sort of, if they're using some sort of transactional funding, and the end buyer is using some sort of lender. A newbie investor might not have that stuff lined up, and they'll want to close in 3 days, and then they'll say, a day before the closing, they'll say, hey, do you know any transactional lenders, right? And so, or like, oh, by the way, we're trying to find a lender on this, but they totally said they can close tomorrow,
Yeah.
right? So all that stuff is stuff that is but it helps us a lot more if that's all put together.
Mm-hmm.
But it causes way less stress for the investor as well if that's all kind of put together before we move towards closing. Because otherwise, all they're doing is running around trying to get documents and make people keep their promises, and that's how they get screwed sometimes. That's how mistakes happen, and obviously we want to avoid that, and they want to avoid that, and allow them to focus their time on either marketing to find more properties, or if they're actual investor, to actually spend more time with the construction and making sure that the rehab is managed well. I'm sure your other podcast guests have addressed that, but I think a lot of investors, a lot of wholesalers especially, they make their job and our job a little bit harder than it needs to be. And I think having good habits and having good structure and having good have kind of seen the whole process out and laid it out in their brains and in their minds before they even engage with us is a good habit to be in.
Yeah, that's really good advice for any of the newer investors out there.
I do have one question, because I hear conflicting ideologies for this.
Mm-hmm.
For example, a short sale, right? Let's say I found a property, and now I know they have to go through short sale, yada yada yada. Like go through the MLS and then list it, whatever. Everything happens as it should. And when should people do title searches for short sales, in your opinion?
For us, we do have certain short sale negotiators that work with us, and they do that for a living. We in general transactions, if you're buying a house, for yourself, like a retail residential transaction, we don't normally recommend people even do a title search, just because if there's a title issue found, you're able to exit the contract. In pretty much every contract we've ever seen, it's just a clause in there. But for people, if you're in a situation where your money's going to be tied up in a deposit, especially a really big one like a sheriff's sale, or even a non-refundable deposit, in many situations like a sheriff's sale, definitely. For short sales, these people, professional negotiators, spend a lot of time and effort negotiating down a second mortgage or even in that first mortgage. What newbie short sale investors do is they don't do a title search. They just negotiate based on whatever that the seller is telling them is on the property. They just go by their word. They spend all this time negotiating this mortgage. just to find out later when they have a buyer that there's a whole other lien in there that they didn't even bother to negotiate. So by that time, they've probably already gotten approval. So now to negotiate that second lien, they now have to start the process all over again. So that can be months of work and time, and probably losing that buyer. So basically, for short sale investors, short sale negotiators, you want to order that search really, really early on, so you know exactly what you need to negotiate.
Or maybe you can spend all this time negotiating that short sale, and you find out that the person that you're negotiating on behalf of doesn't even own the property anymore, right? Like they transfer title somewhere in between, and you're negotiating with the bank about this debt that exists, but the person that you need to sign the deed is in a different country, right? So it's important to know what you're working with. So I guess the short answer to your question is it's our philosophy that you should order that title search as soon as even before you negotiate the short sale. I think what's a little bit different about us is, because we have that search background, we're able to order that very preliminary search to get an idea of what we're working with without investing a lot of money into that title search. For a lot of other title agencies that may not have that arm, not do that in-house, they might have to hire somebody, and then they want to mark that up, right? They want to mark up the title search fee. So then it becomes a little bit cost prohibitive, and then it's kind of like a cost benefit of whether to order that title search so much earlier. So it's a little bit different philosophy, but it's also like an economic decision and an economic reality of what we do. So I guess that's a little bit of a benefit of why we kind of have become a title agency that's been known for work with investors, is because sometimes you just need one of those quick and dirty title searches, without the full binder yet.
Yeah. I mean, I've used it multiple times, and in the past when I was doing sheriff sales, I've used it as well.
Yeah, it's pretty important.
It helped. Yeah.
Again, the reason I ask was just for the simple thing that I know some newbie investors, even when I got started myself, they wouldn't want to do the title search yet because don't even have an approved number for the purchase price. So it might not even be worth, if let's say you're trying to get it at like 150,000, but the bank says they want 200, then it's no deal for them per se.
Yeah.
So that's why I thought I'd ask. But it makes a lot of sense on that ideology as well.
Yeah, if I was paying $250 for a title search, give you a sense, we charge $75 for a quick and dirty title search.
Yeah.
So $75 is it's money, but it's not so much that it's gonna really burn you so much to know what you're working with.
Yeah,
right?
okay.
If it's 250, 300, 400, then I don't know if it's worth it.
Yeah. Got it.
Right, especially if you're doing multiple properties.
Yeah, absolutely.
If you're doing one, I think it's okay, but if you're doing like 10 properties, it adds up pretty quickly. Yeah. Right.
So.
Yeah.
All right, Joe. I don't know if you have any other questions.
I think I'm pretty good, in terms of questions.
Yeah. I mean, thanks for coming on the show.
Yeah.
Really appreciate it. It's been really a pleasure to learn a lot more about title.
Thanks,
with
guys.
everything.
Thank you.
Hey,
Thank you for having us.
So, take care, everyone.
Thank you. Agent. So if they trust you and they're just gonna go straight to like the title company and do everything, then I'm good with that too. Like if they accept my purchase sale agreement, whatever, and everything looks good, then that's the way I'm gonna do it.
Cool.
Yeah. No, I just recently told some newer wholesalers here, you should definitely use an attorney. I'm gonna use one too.
Yeah.
So that way we could get everything done properly, and so that way down the road, they don't come back to me for whatever reason that might pop up and be mad at me.
You never know.
Yeah.
But unfortunately, most wholesalers do not work with attorneys.
Yeah.
They're just on their own, and I get it. You're not taking ownership. A lot of times their involvement is really just connecting the people together, and then they're out, and they use this template to get paid.
Yeah.
That's fine, I get it. But especially in the beginning, you're gonna have a lot of questions. You need someone to guide you.
Yeah. Exactly. That's great.
I always say get help when you need it, because
Sure.
problem is they don't know that they need it. That's the issue.
I mean, I feel like everyone needs help in the beginning. Like, that's literally human nature. Our parents are there to guide us. Like, our teachers are there to guide us. We don't come into the world like knowing stuff. Like John.
I did.
You still make mistakes. Like, John, you're like my boss and my mentor. You're teaching me everything I need to know.
Wow.
Like Joey, you're one of my mentors too. Like I'm learning a few things from you.
Yeah.
Like,
Mostly jokes, but.
and yeah, so it's one of those things you always need to like get help.
Yeah, for sure.
I also think maybe sometimes like when people get like go on a course that's outside New Jersey, a lot of states don't have attorneys. So maybe mentors don't mention it, so then people don't think they need it. But yeah, New Jersey it's a little bit different, and
Or at least northern New Jersey.
at least northern New
Oh,
Jersey.
yeah.
Yeah.
Definitely higher attention.